Hello, good weekend to all. Bringing you a review of the European markets for trading the session of the 31st. Yes, I think we are on the 31st still. I think going into obviously Monday. So yes, indeed, 31st of January 2022. Okay, so hello once again. We do a review of the Ftse and the European markets for Monday's trading. Be sure to visit my website www.into-market-analysis.com. Those that wish to certainly take advantage of the live trading service, and you can find my details on the website. Email me and I'll certainly add you to the WhatsApp group for the daily trading and charts and obviously commentary as well. So that's certainly something for you in terms of the markets going forward, and obviously assist you in your trading activity as well. There's also a mentoring program which I do as well, so be sure to have a look at the website. On the right hand side, there's on my site there's information regarding the actual mentoring program as well. Okay, so going into the Ftse 100 then, so let's quickly bring up a chart of the Ftse. Let's start off with the Ftse 100. So we had a bearish engulfing candle to finish off the week. Now, it certainly has been impressive. It's been very hard to trade the Ftse this week. Initially, I did obviously I think I was 170 odd points up, but then I actually gave it all back on the back of the massive or amazing short squeeze that we certainly had. Okay, so with the political uncertainty obviously regarding Mr. Bojo and his cake gate, okay, his cake fiasco, and whether he's been adhering to rules, obviously going, and obviously no confidence vote as well. That certainly hit the UK. We've got the Ukraine crisis in the background, so again that's a geopolitical concern, and that certainly is causing shockwaves in Europe, but obviously the impact in terms of energy as well going forward, and whether that obviously further exacerbates the supply chain issues that we have at present. Then obviously we've got the situation with regards to tax rises over the weekend. We've got some news now with regards to Mr. Rishi obviously arguing, and Mr. Bojo as well arguing for tax rises. Again, that's going to cause a further squeeze on disposable income, which again is negative for the Ftse 100. Again, we've got Chinese data as well over the weekend, came in relatively negative, so again that's certainly a risk-off factor. And then obviously CBI data as well that came out over the weekend. UK growth weakest since April, certainly doesn't bode well. Adding the fact that obviously you've got the Fed as well, which is hawkish, and that's causing concerns. We've got Mr. Bostic on the weekend arguing for a 50% obviously a rise in interest rates, 50 basis point rise, and again that certainly doesn't bode well. And US data that came in on Friday certainly was indicating a weaker spending and higher inflation. So again, that stagflation, that certainly doesn't bode well at all. In terms of Ftse, it doesn't care less. Impressive move, very, very impressive move. Let's just bring up the chart of the price of Brent. Again, that certainly is helping the Ftse, as you can see here, daily chart. Okay, let's go to a 1 hour chart on the yeah. I mean, we did have some a bit of a sell-off, but nevertheless, the Ftse certainly has remained immune, or should I say oil has remained immune to the sell-off recently. Obviously Ukraine crisis situation certainly helping to a large extent, so bear that in mind. Obviously the concerns of supply side, and that obviously bodes well for oil, but doesn't bode well for the obviously growth going forward in terms of GDP. Okay, so impressive short squeeze, very, very impressive. Whether you can put that down to the fact that Mr. Bojo, the vote of no confidence didn't go ahead, that certainly triggered a short squeeze. Whether you want to attribute that to the fact that oil prices obviously remain high due to Ukraine. Again, a lot of factors at play here. US equities certainly languishing, but yet Ftse very, very impressive and certainly bullish. So whether you want to put that down to obviously Bojo staying, or you want to put that down to oil prices remaining afloat, again, that certainly is your call with regards to that. But again, the Chinese data over the weekend came in negative, so you are going to see some downside pressure on the Ftse going into Monday's trading session. So again, bearish engulfing candle on the Friday, so negated the full move back to 7600, which again very, very impressive. One hell of a short squeeze. Obviously in bear markets, short squeezes are always powerful. 60-minute chart then, so let's have a look here. So in terms of the key levels for your trading, again this is just helping you out in terms of your trading going into Monday. Okay, so we've got key resistance above that 7615. Obviously we've got resistance here at 7600, which is a psychological 100 level. Okay, we've got this bottoming tail here that bottomed out at 7388 before it started to reverse. We've got previous support equals, so should we say previous resistance equals support around 7380. So we're going to be oscillating between 7520, 7600, and obviously you're looking at 7390. If the Ftse continues to fall on the back of obviously weaker CPI data, weaker Chinese data, political uncertainty regarding Ukraine, and obviously Mr. Bojo certainly seems to be in some sort of crosshairs with regards to the Sue Gray's report and the Met. Okay, so again, let's see how that's obviously unravels so far. This man is like a cat with, well, I wouldn't say 9 lives, 100 lives. I mean, he seems to survive every political scandal that certainly has unfolded. But either way, this is where we are. Okay, so in terms of the key inflection point as well, there's another level I want to give you. 7530 is a key inflection point here in terms of a 60-minute chart, and there you're basically level. So if we do get a potential move higher up to 7520, 7530, then from my perspective, that's again is a shorting opportunity with stop loss above 7620. Okay, moving on to the 10-minute chart of the Ftse. We seem to have obviously built a base around the 7420 zone for now. We've got gap fill above at 7550, so watch out there. And then again, resistance at 7590. You've got this inflection point here, so again, worth noting, but hasn't really moved around that zone as often as we'd like, but nevertheless, that's the level. Obviously, we've got gap fill below at 7370, and then obviously ultimate gap fill at 7290. So again, a lot of fundamental, obviously, arguments need to be made for that gap to close on the downside. Okay, just cross-referencing the Ftse then on the Ftse 250 and 350. So daily chart certainly seems to be very, very weak in terms of Ftse 250. So again, you can attribute that to a lot of factors, but nevertheless, we're on the daily chart, and we do have potential support around here, so which is previous resistance equals support where we bounced. Then also you've got a key level up here as well. So let's see how that unfolds. Okay, for now you've got resistance above, and it certainly relatively remains weak. Ftse 350, let's quickly cross-reference that as well. Daily chart bearish engulfing. Again, the fib retracement ratio of pivot high to pivot low. It's obviously held at fib 75%. So that's the key level to watch out from my perspective. So again, bearish engulfing. Overall, Ftse remains weak. We've got a lot of variables in the background. You've got Fed hawkishness that hurts commodities, which in turn hurts Ftse. Oil prices certainly seems to be very, very high right now, and obviously Biden, that's one of his key potential metrics at the moment. He wants to control inflation, and again, I'm not sure how he's doing that with regards to Ukraine, whether he wants to inflate the whole thing and obviously trying to obviously come up with a deal with the Russians, which in turn obviously then doesn't obviously threaten supply, which in turn obviously causes oil prices to fall. So also, given the fact that the Fed now is hawkish, again, that certainly hurts commodities and therefore takes the wind out of commodities. So let's see how that unfolds. But nevertheless, this level that we're at the moment, can it sustain itself? Good question, especially with Chinese data out over the weekend as well, relatively weak. It's going to be very hard, but this market continues to surprise us all. I certainly would have expected oil prices to reverse by now to $70, but again, it certainly seems like the OPEC certainly have a good control. And certainly seems like the economies are coming out of the grind, etc., etc. I mean, there's so many variables. I'm not going to go into it. Just try and keep it as simple as we can for the analysis here. Okay, so in terms of the cross-referencing that, then let's just quickly go to German, obviously indices. Give you an insight here. So this key inflection point here certainly has held at 15,000, which is obviously a psychological level. We've got gap fill as well. So again, Ukraine crisis hits the European indices further, or even exacerbates it even more. Okay. And again, just reading some article here now. This is quite an important article here. Just quickly share this as well. This is going to be relatively negative for the markets going forward, especially the Ftse. Obviously, the squeeze on consumers, given the fact that you've got interest rates rising, you've got inflation spiking, and now obviously they're looking to potentially increase tax as well. So a planned increase in British social security coming from workers and employees will go ahead in April. Prime Minister Boris Johnson, etc., etc. Scrap the rise due to the strain on household budgets. Obviously, they've ignored that. With surging inflation exacerbating cost of living squeeze, the government has faced growing pressure, including from its own conservative lawmakers, delay cancelled a new health and social care levy that will see the rise in national insurance by 1.25%. Some British newspapers have speculation that Johnson, who faces a possible no confidence vote, which we've already obviously stated over social guidance at Downing Street during COVID-19 lockdowns, might seek to shore up support by scrapping the rise. So again, that's going to be interesting. Let's see if that happens. London police move to limit Downing Street parties report. Okay, so these individuals are hypocrites. What can we say? Britain racks up its biggest budget since World War II, equivalent to 15% of GDP. So that doesn't bode well, does it, folks? Okay, as we all know, greater the risk, the greater the return, and therefore interest rates are going to start to rise. So as bonds start to fall, given the fact that their GDP ratios are very, very high, significant debt, etc., obviously that doesn't necessarily bode well. And then obviously we already know the inverse relationship with yields and interest rates. So the pair said that while they are tax cutting conservatives, they need to be responsible with public finances. Really, people are the best judges of how to spend their money. want to get through this phase and get on with their agenda. So again, that's relatively a risk off a potential scenario. So again, not surprised given the bearish engulfing candle on Ftse, but that short squeeze was very powerful and certainly caught me off guard. Okay, so in terms of the German DAX, we seem to be oscillating between, I mean, these are your key levels now. Gap fill is here, certainly holding there. You've got multiple gaps to fill, so watch out for all those gaps here. You've got the ultimate gap up here. Obviously double top 16,300 before the Ukraine crisis shaved 1,000 points off the DAX. So again, what's interesting here in the German DAX for me is you've got this major double top and then obviously right shoulder. Okay, given the Fed hawkishness, etc., and Ukraine crisis potentially building up. So do we obviously trigger that H&S formation? That's the quick key question for me on the German DAX and all the European indices really. I mean, you can clearly see it on the this weekly chart here, just bearish consolidation and now looking to flush down to 13,000, potentially lower. So it doesn't bode well. Obviously we've got Omicron as well. A lot of people are forgetting about that as well in terms of the scenario there. That again, any additional potential strain, which God forbid, hope we don't get that, but nevertheless, any additional strain could put further pressure and obviously exacerbate finances, inflation out of control, supply chain concerns. So many factors right now. Obviously Ukraine crisis as well, one would argue certainly on the bearish side, and as you can see here, increased volume on the sell side as well for German DAX. So keep an eye on that. Okay, in terms of the French CAC, let's see what's going on here. Perfect head and shoulders formation again. Are we going to go up and test the highs, or are we going to fail and miserably and then obviously start the potential sell-off back down to 6,600, which is clearly gap fill. We've got another gap fill at 6,350. So again, Ukraine crisis, obviously we already know. There is talk now, obviously, with all central banks now potentially pivoting towards a hawkish stance. Keep an eye on that as well. If the ECB starts pivoting towards a hawkish stance, and again, you are going to see that right shoulder kick in. Let's take the pivot high, take it to the pivot low of the recent low. Okay, so let's see what's happening here. We've got multiple gaps as well to fill, so watch out. We've got gap fill here, we've got gap fill up here. Okay, and then obviously ultimate gap is up there, but again, that's not certainly expected for now. And the right shoulder really, I mean, if you bounce from here, which we've bounced so far, say we close the gap at 7,200, you are looking for a vicious downside. So again, very interesting scenario. Or do we just continue to obviously push higher and short squeeze higher on European equities? Again, this is your take, folks. So again, my understanding is just trying to give you all the potential scenarios, just like an individual playing chess on the board. Again, just all the potential scenarios, and again, we as traders, we just basically align the fundamentals and then obviously take the best trade accordingly, and stop loss is always in there obviously if we're wrong. So it's all about trade setups, folks, and that's what we're trying to do over the weekend. Okay, so that's the scenario in terms of the French CAC. Quickly have a look at the Eurostoxx. Okay, so Eurostoxx sold off towards gap fill and bounced. Pretty classical move there. Okay, so quite an important thrust in terms of Eurostoxx. Let's go to the daily chart. Okay, so daily chart again still remains within that bearish engulfing candle, as you can see, all consolidation within that candle. And again, you can see the double top scenario. So you've got the left shoulder. Okay, you've got the head, which is your double top, and obviously we're looking for a right shoulder, then obviously flush on the downside. So certainly seems that European equities are very, very top heavy right now. And again, if the ECB starts to pivot towards that hawkish stance, then goodbye to European equities. So again, so many variables to forecast that. I can't forecast that right now in advance. I mean, I wish I could. I'd be an awesome, I'd be even better trader. But again, that's basically where we're at. Okay, I'd certainly be a better trader. So again, you can clearly see the H&S formation. My job is really just to, every trader's job really is to identify that and realize that this indices is certainly very vulnerable. If the Ukrainian situation escalates, we know exactly where we're going. If obviously we get another variant, we know exactly what's going to happen, technically speaking. If the Fed goes down its hawkish path, which again Mr. Bostic has called for 50 basis point hike, and obviously that will force other European equities, other central banks in the world then start pivot towards a hawkish stance. Okay, nobody wants to be the last person holding the bag, and therefore obviously you are going to see a major risk off event again occur. So okay, folks, I think that's basically the trade setup at present in terms of the trading session for Monday's trading. So I wish you the best, and again, like I said, if you do wish to join me, you're more than welcome to join me. I usually offer a month's free trading access to the trading group. So it's basically run via WhatsApp. I give entries, exits, and I provide my rationale, whether it be technical, fundamental, and also from an intermarket analysis perspective. for the markets to go higher or lower. So be sure to join me on my website, and you can certainly find details there. Email me your mobile number. I'll add you to the WhatsApp group, and if you want to take advantage of the mentoring program, then certainly email me as well, and I'll be more than happy to arrange that for you on a one-to-one basis via Skype. Okay, take care and wish you the best. Goodbye now.